So couple of myths around it. All spin-offs is special situation. It's not true. The reason why is not true because each special situation is a different. You have to evaluate it as a different company. So somebody is requesting annotation. I'll just say approve. Okay. Yeah. So each special situation is different. You have to evaluate everything at a on its own, how you will evaluate a separate company. Just because a company is undergoing a demerger or it spins off or a change in management is there, or whatever the case is, it doesn't become a special situation. So the reason I emphasize it on enough because in the last 2 3 years, this name has become a buzzword, and in my opinion, there's a lot of un, not true things around it, a lot of made up stuff around it, whether it's a fund promoting itself or people just kind of just piling onto it. So a lot of myths and things around it. So anything that goes under a spin-off, please don't think of it as a special situation. And especially if everybody on the street knows about it, it's not a special situation. If everybody is aware of something, there's not really everything's pretty much into the price at that point of time. The second part is management change. So management change on its own is not a special situation. Management changes takes time, and if a CEO is being changed, it's not necessary that allows you to buy a company at a cheaper price. So you have to consider this part here, based on whether the company is available at a discount to its fair value, or whether that management change is going to change things dramatically in the company in that specified period of time that you choose to be invested at. And again, I emphasize here because this has been promoted as special situation when it's clearly not. A good example here would be Eureka Forbes, where the CEO of Jubilant Foodworks kind of went to Eureka Forbes. There was stock uh, volatility there. And again, this because the CEO was joining, it was supposed to be a big deal. But after a point, those things stabilize. You wouldn't really hear a lot of people talking about Eureka Post because the price action has not been doing well. So uh, again, like just because a very good CEO joins in doesn't necessarily mean that is becomes a special situation. Um, and then again, this forced selling buzzword. So everybody assumes special situation means forced selling. That's not true. Forced selling happens only, and forced selling is only again um, uh, possible and kind of will lead you for a let's say uh, uh, buying something at less than fair value if the float is less. And by float, I mean how many. So I'll just write float here. Um, so by float, I mean how many stocks are available uh, apart from what the promoter holds. So if a float, for example, let's say is 1 crore and the promoter holds 75% of it. So you have 25% available in the market. And let's say there's one or two LIC or things, people like that are holding it. And there are mutual funds and stuff that hold rest of it. So that selling by mutual funds, if they are required to do so because of law or regulations or whatnot, then it becomes a special situation because at that point of time, there's already low float available. If something spins off, which is when they will kind of spin it off and the market will value it. So 9 out of 10 cases, market doesn't value it properly. And then on top of that improper valuation, if you have forced selling, in that scenario with a low float, then it becomes something. And then if the company is interesting and its fundamentals are intact, and if you can buy it at less than let's say uh, 4 or 5 cents on 4 or 50 cents on a dollar, then you can kind of term it as a special situation. The one of the examples I would like to give it is here is Piramal Pharma. So Piramal Pharma has almost 100 crores of shares, and float is huge. So it didn't matter there, and everybody on the street pretty much knew about it. There were publications, media chatter, some hour-long segments being done on business channels around Piramal Pharma and CDMO and whatnot. Um, but that's not going to make you a special situation if everybody knows about it and there's enough shares to go around the table for everybody. Um, you need special. An opposite of it would be Kamdhenu. So Kamdenu doesn't have that much shares. Promoter owns enough of the equity. Not a lot of chatter was there. Nobody kind of knew about it. Um, Everybody assumed they make steels. Asian Paint will kill the paint business. So there's not healthy chatter there, but it was available for very cheap price. Both the companies combined at one point of time in June last year was available for about 8 times earnings, and that now today has been from that price has been a six bagger. So it has to be evaluated on its own, and there are multiple factors that go into creating a special situation. It's just not that everything can be a special situation just because by the virtue of being spin off. So that's where I wanted to emphasize. Any questions there, I'll pause it um, till I figure out how to go to the next slide.
So, Tariq, I think Meet has made a very important point here. He
Yeah.
mentions that management change is a special situation if you play the arbitrage comparing open offer price with current market price. Not all, but selective. And
Yes.
can it be a good long-term bet or not is secondary thing.
Exactly. So the only caveat I will put there is, um, so we'll see in the next couple of slides is, so Meetbai is right that you can do it for the arbitrage, but there are so many announcements. There are 1,200 announcements every day that happens on the stock exchange. So you have to narrow down based on where you want to invest in. I don't do open offers. I don't do like arbitrage. I don't do right issues. Like I don't do buybacks because there are so many of them happening all the time, and the max you can put in there is probably like you can earn 10 20 percent on let's say a 1 2% position. So it depends on where you want to focus at. I specifically focus on spin-offs, and the general reason being there is if there's a large enough spin-off with not many people know about it, I can build a very high value position in it at a very deep margin of safety. So for me, chances of losing money are less, but even if it goes 50%, I make a pretty significant return there. So that's where instead of me kind of targeting 10 buybacks, I would rather focus my energies on one spin-off.
Right. Well said, Tariq.
Yeah.
So, Tariq, Jatin makes a point that sometimes arbitrage also doesn't play out,
Yeah,
like escorts. He gave the
exactly.
example of escorts.
Exactly. So Escorts Kubota was a merger, change of management there, all of it. But again, it was a large cap company. Everybody know about it. So you have to. There are like qualitative factors and quantitative factors as well. So that's why I believe that there's no simple rule for special situation. You have to value these points across, and each of them will have its own kind of connotations around it. So you have to value, weight, and kind of use your better judgment to kind of figure out where you can kind of invest.
Yeah.